Lepatoni Limited is a company that builds innovative and environmentally friendly housing. Their houses use high quality materials, and the unique patented energy saving technology used in the houses has been the result of the company's own extensive research in the area. Klepatoni Limited is planning to expand into another country and has been asked by a prominent person in that country for a price quotation to build them a house. The board of directors believe that securing the contract will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant costs. The following information has been obtained in relation to the contract. 1. The chief executive and marketing director recently met with the potential client to discuss the house. The meeting was held at a restaurant, and Klepatoni Limited provided food and drinks at the cost of 37,500. 1,200 kg of material Z will be required for the house. Klepatoni Limited currently has 550 kg of material Z in its inventory purchased at a price of 5,800 naira per kg. Material Z is regularly used in its houses and has a current replacement cost of 6,500 per kg. The resale value of the material Z in inventory is 3,500 per kg. Number 3. 400 hours of construction workers' time are required to build the house. Klepatoni Limited construction workers are paid an hourly rate of 2,200 under a guaranteed wage agreement and currently have spare capacity to build the house. Number 4. The house will require 90 hours of the engineer's time. Klepatoni Limited engineers are paid a monthly salary of 475,000 naira each and do not have any spare capacity in order to meet the engineering requirements for the house. Klepatoni Limited can choose one of the two options. 1. Pay the engineers an overtime rate of 5,200 per hour to perform the additional work. 2. Reduce the number of engineer hours available for the existing job for the building of product Y. This will result in lost sales of product Y. Summary details of the existing job the engineers are working on. Information for 1 unit of product Y. Sales revenue 486,000. Variable cost 336,500. Engineer's time required per unit 30 hours. Number 5. A specialist machine will be required for 7 weeks for the house to be built. Klepatoli Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1.5 million naira. The machine is currently not in use. The machine can be rented for an additional 15 weeks at a cost of 1,525,000. The specialist machine can only be rented in blocks of 15 weeks. Alternatively, a machine can be purchased for 16 million naira and sold after the work on the house has been completed for 14 million naira. 6. The windows required for the house has recently been developed by Klepatoni Limited and use the latest environmentally friendly insulating material. They produced the windows at a cost of 3,495,000 naira and are currently the only ones of their type. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and will not be for sale to prospective clients. Klepatoni Limited has had assurances and from 3 separate clients that they would place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000. If the windows are used for the contract, Klepatoni Limited will not be able to attend the conference. The conference organizers will charge a penalty fee of 150,000 for non-attendance by the company. The chief executive of Klepatoni Limited can meet the clients directly and still secure the orders for the windows. The meeting will require 2 days of the chief executive's time. The chief executive is paid an annual salary of 41,400,000 and contracted to work 260 days per year. Number 7, the house to be built requires 400 kg of other materials. Klepatoni Limited currently has none of these materials in its inventory. The total current purchase price for these other materials is 600,000 naira. Klepatoni Limited fixed overhead absorption rate is 3,700 per construction worker hour. 9. Klepatoni Limited normal policy is to add 12% markup on the cost of each house. Required: A. Produce a schedule that shows the minimum price that could be quoted for the contract to build the house. Your schedule should show the relevant cost of each of the 9 items identified above. You should also explain each relevant cost value you have included in your schedule and why any value you have excluded are not relevant. B. Explain 2 reasons why relevant costing may not be a suitable approach to pricing houses in the longer term of Klepatoni Limited. C. Recommend with justifications a pricing strategy for Klepatoni Limited should use to price the innovative, environmentally friendly houses when they are launched in the new country.
Thank you very much, Emiraj. As you can see, please drink. You have to take a cup of water. It's a big one. This is the kind of question you see if you are for the first time writing a performance management. You are given this kind of a question as a compulsory. You, immediately you'll be sweating because there are a lot to be done. It's a very big one, despite the fact that we compress the font of the question. It's about 2 pages or more, So, but again, it's what it is. Now, in solving this kind of a question, whenever you want to solve, like I explained to you in previous classes, whenever you want to solve relevant costing question, you need to start from the additional information. And I also mentioned to you that whenever you are given a table before the additional information, mostly the figures given in that table are irrelevant. You need to ignore them, except that there is no other figure other than what you have in the table. However, in this particular question of Klepatoni, we don't have any table given to us, so that's fine. However, you will see from the first paragraph where I underlined, they were told that the board of directors believe that securing the contract will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. The intention of the board of directors of Klepatoni is for them to be able to break even. They don't want to hand any profits. Their intention is to break even. That's why they want to cover their relevant costs. So they want to quote a price that will be sufficient to cover their costs. So meaning that there will be no any profit on that. So we are now given the additional information. So let's pick it one by one. Please open to the material on your side. Then let me switch to the working notes so that we can quickly complete the question. I will stop sharing this now. Okay. Yes, the name of this company, this is Solution. So illustration number 6. The name of the company is Klepatoni Limited. Number A, requirements. That's the requirement number, let me see. Yes, requirement number A. So I can say calculation of or calculating relevant costs. or minimum price. Okay, right. So need to create two naira signs. So one naira sign, another one here. Now let's start from the additional information. We are told that the first one, please, you have to participate. All of you, you have to participate in this class, in the question we want to solve. So the first one, we are told that the chief executive and marketing director recently met with a potential client to discuss the house. The meeting was held at a restaurant and Clepatoni Limited provided food and drinks at a cost of 37,500. Please tell us, the 37,500 naira, is it relevant or irrelevant? If you know it, just raise your hand. Don't talk. Raise your hand first, then I will call you to answer. Yes, that 37,500 for food and drinks, is it relevant or irrelevant? If you know it, raise your hand, please. And then let's be fast. Yes, raise your hand if you know it. Are we still together?
Yes. Let me just give it a try.
You did not raise your hand,
Sorry,
Oliver.
I'm about to do that now.
Yeah, go ahead.
Okay. No, I think it's irrelevant because this kind of course is more or less like a survey or a research. It falls under developmental course or something like that. So it's possible that this meeting can hold without even a contract. So it's more or less like an administrative cost.
Okay. All right. So, so what you are saying is that the cost incurred on the food and drinks is not, I mean, it's not relevant. Is that what you are saying?
Yes, sir.
Okay. So any other person? Yes. Any other person? Alexa, which page is this? Is that, it's page, let me see. This is page 29, please. Yes, I'm asking again. Relevant or irrelevant? Oliver has said it's not relevant. He said it's a development cost. Okay. So please, let's be fast in our responses. And you have to participate. All right. So who again? All right, let's move on because of time. Now, it is true that the cost incurred on food and drinks of 37,500 is irrelevant. It is not relevant because it's a sunk cost. All right, it's a sunk cost. They've already incurred the cost before the commencement of the project. Any cost incurred before the project commences is irrelevant. Remember, relevant cost must relate to the future. So this 37,500 is a sunk cost. Then we have to ignore it. So if that is the case, you need to put it down. The first page will be for requirement number A, together with the assumption, the second page, and the third page for 2 and 3. However, you need to estimate on the day of your exam when you are solving this kind of a question, you need to estimate how many, the pages, the number of lines in your page, in your answer booklet that will occupy or that will contain the question, the calculation that you want to do. No matter how big is the question, the calculation of relevant costing question cannot be more than half a page. So if that is the case, just divide the page by 2. Then you start your assumptions almost immediately, because it is important that whenever you are solving relevant costing question, you must state your assumption. Even though in the question, the examiner asks you to do that, whether you are asked or not, is your response. For you to be able to earn your mark, you have to state your assumption, because assumption carries more mark than the calculation you have done. In this particular question, whereby the question, the mark awarded to the requirement is 21 marks. So assumption may take like 15 marks. Calculation is about 6 or thereabout. So you cannot see, if you believe that you have done so much calculation, you just ignore the assumptions. That means you have not done well. A student can, if a student is able to manage the assumptions very well, and you can even pass it. Okay, even though if all the line items in your calculation is not correct, provided your assumption are okay, you are well documented, then of course you may pass that particular requirement. But in any case, let's move on. So that food and drink is not relevant. We ignore it. So let's start our assumption somewhere. Let's say we're starting from here. Assumption. Okay, so I can then say the calculation above is based on the following underlying assumption. Okay. Number one, we talk about food and drink. Food and drinks. Our assumption on food and drinks. Assumption is not something you are going to fabricate. It's already in the question. Just tell the examiner how you have arrived at your number. That's all. So I would then say the cost incurred, the first incurred on food and drink of 37,500 is a sunk cost. Sunk cost is the same thing as past cost. It's a sunk cost, and therefore irrelevant. Okay, so let's move to the next one. Go back to the question. Number two, 1,200 kilogram of material Z will be required for the house. Clepatoni Limited currently has 550 kilogram of material Z in its inventory, purchased at a price of 5,800 naira per kilogram. Now, this 5,800 kilogram, is it relevant or irrelevant? Talk to me. Yes, Oliver, go ahead.
It is relevant.
Why?
We are told that the material is currently in use.
Okay.
So the replacement cost will now be relevant because it has to be, the replacement cost will be relevant, yeah.
I said the 5,800 naira, is it relevant or irrelevant?
It's relevant, sir.
Why?
We are told that the material is currently in use.
Okay.
And
That's not what I just said though. Examiner to Clepatoni Limited currently has 550 kilogram of material Z in its inventory, purchased at a price of 5,800 naira per kilogram. I'm not asking you that 5,800 naira purchased recently, currently, is it relevant or irrelevant?
It is relevant.
Pardon?
It is relevant.
It is relevant. Why is it relevant?
Even though that they have the material in the store, it is still currently in use.
You are missing it. Examiner did not tell you it's currently in use. We've not gotten to the where the examiner mentioned regularly in use. In this particular instance that I just mentioned, you are told that Clepatoni Limited currently has 550 kilogram of material Z in its inventory, purchased at a price of 5,800 per kilogram. I'm now asking you, the 5,800, is it relevant or irrelevant? Yes, Abigail.
The 5,000, yes, sir. The 5,800 is a sunk cost and is not relevant.
Okay. So the 5,800 per kilogram, you are told that that 550 kilogram that is currently, that the company has in its inventory was purchased 5,800. The 5,800 is an historical cost, it's a sunk cost, it's a past cost, and therefore irrelevant. So we don't need it for anything. You ignore it. Let's go and state our assumption first before we proceed. All right. Number 2, material Z. So we then say the original cost of material Z of 5,800 naira per kilogram is irrelevant because it's an historical cost. Okay, the original amount incurred on the item of inventory is historical cost. Now let's read further. Material Z is regularly used in its houses and has a current replacement cost of 6,500 naira per kilogram. That 6,500 naira, is it relevant or irrelevant? Oliver, go ahead. Oliver,
Sorry.
you are raising hand.
No, let me bring it down. Sorry, I didn't bring it down.
Okay. All right, Oliver, you raise hand. Talk to us.
The 6,500 naira is a relevant cost.
Irrelevant or relevant?
Relevant. It's a relevant cost.
Okay.
Because
Why is it?
The material is regularly in use, always used in the stock, and it will be replaced.
Okay. So like I said, we are correct. Like I explained to you when when we were discussing the concept, I mentioned to you that under current purchase price, I mentioned that the current purchase price is the same thing as replacement cost. Therefore, replacement cost should be used when it can be ascertained that the material is currently, is in frequent use and will be replaced. So examiner has mentioned to you that material Z is regularly used in his houses. So anytime you are given replacement cost or current purchase price, it is relevant. You have to account for it. Whether examiner tell you is in regular use or not, once you can see replacement cost or current purchase price, it is relevant. So let's go and put it down in our calculation. Material Z. So you then come here, material Z, which is you need how many materials are we going to put down? How do we do our calculation? We know that it is 6,500 naira per kilogram. So multiply by what number of kilogram? We have 1,200 kilogram, we have 550 kilogram. What do we do? Oliver, yes.
I think we
Oliver.
multiply by 1,200 kilogram.
We multiply by 1,200 kilogram. That's correct. Now, the reason why I ask that question is that a student can just say, okay, since you have 550 kilogram in the inventory, therefore, and you need only 1,200, then 1,200 minus 550, you have 650. It's not 650. What you need for the contract, what you need for the project is 1,200. You want to replace the entire 1,200. You don't have anything to do with the material in the inventory. You don't have anything to do with that. So you go to the market and purchase the 1,200 kilogram at the current purchase price. Okay. So multiply by 1,200 kg. So what do you have there, please?
7,800,000.
7,800,000. That's that. We are done with that. Let's move to the next one. Now, we have not completed our assumption. So why did you choose replacement cost? So you need to state that in your assumption. Okay. However, the replacement cost of 6,500 per kilogram is relevant. Okay, it's relevant, and this has been included in the calculation. Okay, that's that. Then there's one more item there. We are now told again that the resale value of material Z in inventory, that 550 kilogram that the company has in its inventory. We are now told that the resale value of the material Z in inventory is 3,500 per kilogram. That 3,500 naira, what do we do with it? Is it relevant or irrelevant?
I think it's irrelevant because
Why?
it wasn't disclosed that the material will be disposed of.
Okay, you are correct. Remember, in my explanation to you, I mentioned that the disposal value represents a saving to an organization. Therefore, disposal value should be used when it can be ascertained that the material is no longer needed and will be disposed of. Now, in this particular instance, examiner mentioned to us that resale value of the material Z in inventory is 3,500 per kilogram. You are not told whether the material will be disposed of. Since you are not told the material will be disposed of, just ignore it. All right, you don't need to do anything. So just need to state your assumption on that. You can say also, or in addition, also, since also the resale value of the material, resale value of the material held in store, held in inventory of 3,500 naira per kilogram is irrelevant. Since there is no indication that the material will be disposed of. Okay, that's it. We are done with that. Let's move to the next item, number 3. 400 hours of construction workers' time are required to build a house. Clepatoni Limited construction workers are paid an hourly rate of 2,200 naira under a guarantee wage agreement and currently have spare capacity to build a house. All right. Okay. So that 2,200 naira, is it relevant or irrelevant? Considering the scenario, is it relevant or irrelevant? Oliver, yes, go ahead.
It is irrelevant
Why?
because the laborers have ideal capacity.
Because there is idle
The
capacity, there is spare
Yes.
capacity. So
Spare
that's the
capacity.
reason. All right, then. So let's go and put it down. Let's put it down. Construction workers' time. That's the heading. Number 3. Number 3, construction workers' time. Okay. Now, Cleopatra must work appear early race. the hourly rates of 2,200 naira for construction workers' time is irrelevant since the company has spare capacity. Since the company has spare capacity to build a house. So Emirate and Janet, whenever the concept is that whenever there is idle capacity, when you want to determine the labor cost and there is idle capacity or spare capacity, relevant cost is equal to 0. Okay? Whenever there is idle capacity is the same thing as spare capacity. So whenever a company has idle capacity, relevant cost of labor is equal to 0. You don't charge anything. All right? So that's why we are not considering that. So let's move to the next one, please. Then number 4, the house will require 90 hours of the engineer's time. Klepachoni Limited engineers are paid a monthly salary of 475,000 naira each and do not have any spare capacity. That means the engineers are working at full capacity. Therefore, I want to know, tell me, the 475,000, is it relevant or irrelevant? Oreoluwa, go ahead. Ore, go ahead. Ore, you raise hand.
Yes, the 475,000 is irrelevant.
Why?
Whether or not the engineers do the work, they'll still be paid the 475,000 as salary at the end of the month.
Okay, you are correct. Employee working at full capacity are employee on a monthly salary. The salary paid to those category of workers is a fixed cost. Therefore, is irrelevant. It's irrelevant. The 475,000 naira is irrelevant. Whether you execute this project or not, you must pay those engineers their salary. Therefore, just ignore it. Okay, so let's go and put it down. Engineers' time. Okay. Number 4, engineers time. The salaries, the salary paid to the engineers of 475,000 naira per month is irrelevant because it's a fixed cost. So irrespective of the decision taken on this project, whether you build this house or not, you must pay the engineers. So don't need to talk too much of story. That's it. Now let's move on. In order to meet the engineering requirement for the house, we are still on the same scenario. Klepachoni Limited can choose one of the two options. Now, whenever you are given alternatives or options, it means that you have to select a particular course of action. You need to make a choice. So when you are determining relevant costs and you are given option or alternatives, then you are going to select a lower cost, all right, because your intention is to minimize cost. So option 1, pay the engineers an overtime rate of 5,200 naira per hour to perform the additional work. Option 2, reduce the number of engineers hours available for their existing job for the building of product Y All right, this will result in losses of product Y. Summary details, blah, blah, blah. Then, now, because there is loss of sales, when there is loss of sales, there will be loss of contribution. There will be contribution loss, because difference between sales value and then variable cost will give you contribution. Therefore, in this case, what you are supposed to do is to determine the overtime cost. Let me just, because of time, let's quickly go there. Go to our workings, our calculation. This is engineer's time. So you come here, engineer time. Because there is an option, there's option, okay? You don't say the lower of number one, overtime. How many hours are you spending? 90 hours is required for engineer's time. 90 hours of engineer's time are required. Therefore, I will say 90 hours multiplied by what's the overtime rate. The overtime rate is 5,200 naira. Multiplied by 5,200. Give it to me. What do you have there? Multiply the two together. Yes.
468,000.
468.
468,000, yeah.
468,000. Here is 468,000. You close it. All right. Because you want to make a selection. Number two, contribution loss. Contribution loss. In this case, I will go back to the question. You need to first of all determine contribution per unit. You need to determine contribution per unit of product Y. Okay, so to get the contribution, your sales minus variable cost will give you contribution. We give you total contribution. Then you now divide it with the activity level, which is 30 hours. So that will give you contribution per hour. Then you now multiply it with the number of hours required, which is 90. So this is what I'm saying. The sales value is how much? That's
486,000.
486,000. Here is 486,000 minus variable cost of
3,500.
500. Okay. Then divided by the activity level of 30 hours. Okay. Then multiply by 90. I think that space is too, I need to redo it. Multiply by 90 hours required. Let me push this one to the front a little bit. This is 468,000. 468,000. Okay. Then push this one to the front, 7.8. This one will be here. This will be here. Okay, then. Because if you don't do it this way, you are going to have rounding. You are going to have rounding error. Because if you calculate the contribution per unit separate, then you are going to round that one before you multiply with 90. But if you do it this way, then you are going to have the whole number. So give it to me. What do you have there? Total. 486,000 minus 336,500 divided by 30 equal, multiply by 90 equal.
8,500.
For what?
448,500.
448,500. Okay, so we have the option to make 468,000 over time, contribution loss of 448,500. So contribution loss is lower. I would then say 448,500. That's it. We are done with that option. Now, move on to the next one. Then we need to go and we need to continue with our assumption. So let's go back there under engineer's time. So I would then say the only relevant cost is the lower of the overtime cost of 468,000 naira, or the contribution loss of 448,500. Okay, that's it. I'm done with that. Not too much of story. All right. Then number 5. Note number 5. A specialist machine will be required. Please mute. A specialist machine will be required for 7 weeks for the house to be built. Klepatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1.5 million naira. The machine is currently not in use. The machine can be rented for an additional 15 weeks at a cost of 1,525,000 naira. The specialist machine can only be rented in blocks of 15 weeks. Alternatively, a machine can be purchased for 16 million naira and sold for the work on the house has been and sold after the work on the house has been completed for 14 million naira. Now, again, in this particular instance, there is an option, okay? There is a choice to be made between whether to to incur additional rental cost of 25,000 or to purchase the machine at 16 and dispose it of at 14. However, the cost, the rental contract cost of 1.5 million naira, is it relevant or irrelevant? Yes. Oliver, talk to us.
Yeah, it is relevant, sir.
Why is it relevant?
It is relevant because we were told that already the company already has already have the machine on rental basis, and they have 3 weeks left. So which implies
Okay.
that they can use the machine for another 4 weeks. So they still need the machine again for another 3 weeks to complete the contract. And they cannot rent the machine on a 3 weeks basis. We are told that it is on a 15-week basis. So they need to buy that machine, even though it will be used only for 4 weeks or thereabout. So it is relevant.
Okay. So the 1.5 million naira is relevant, right?
Yes, yes, sir.
Okay. Yes, any other person? Any other person? Yes. The 1.5 million naira, the rental
No,
cost, relevant
no.
or irrelevant?
I'm referring to the second one, sir. Not the first one is irrelevant, sir.
That's what I asked now. I was asking
Okay.
the
So the first one is
1500,000.
irrelevant,
That's
sir. It has already been incurred.
so that's what I want to hear. So the
It's a
1.5
committed cost.
million naira,
It's a
irrespective
committed
of what
cost.
happened,
Yeah,
is a committed cost. It's not relevant. That's what I
it's not
want to
relevant,
know.
sir.
You
Okay.
don't call it a sunk cost. It's not a sunk cost, rather it's a committed cost because this has to do with contracts. Okay? There's an agreement between the owners of the machine and also the user. So it's a committed cost. So what you are going to say here, let's go and put it down. Number 5, specialist machine. Okay, so you then say the rental cost. The rental cost of the specialist machine of 1,500,000 naira is a committed cost. You have to mention it. It's a committed cost. Okay, and therefore not relevant to the calculation. To the calculation. Full stop. However, the only relevant costs attributable to the specialist machine, attributable to the specialist machine is the lower of, let me rewrite that. Rental costs. Okay, move to the second page. Is the lower of additional rental costs of 1,525,000 naira, or the net purchase price of 2 million naira, representing the difference between let me rewrite it. Representing the difference between the purchase price and the disposal value. Purchase price of 16 million and the disposal value of 14 million naira. So let's go up there. I will then come here under specialist machine. Specialist machine. Then say, because there is an alternative, so the lower of option 1. Okay, additional rental cost. Additional rental cost of how much? 1,525,000. We close it. Then option 2. Option 2, net purchase price. Net purchase price. 16 million minus 14 million, which is 2 million. Okay. So 15,25,000 is lower. Here is 15,1525,000. So we select that. Okay. Move on to the next one. Number 6. Number 6. The windows required for the house have recently been developed by Clepatoni Limited and use the latest environmentally friendly insulating material. They produce the windows at a cost of 3,495,000 naira and are currently the only ones of their type. So that 3,495,000, is it relevant or irrelevant? 3,495,000, relevant or irrelevant?
It's irrelevant because it's a past cost.
Because it's a past cost. It's a sunk cost. Okay. So the cost, the window cost of 3,495,000 naira is a sunk cost and therefore irrelevant. So let's go and state our assumption. Number 6. Assumption number 6. window cost. The cost incurred to produce the window of 3,495,000 naira is a sunk cost. Don't use past cost. Sunk cost is better. It's a terminology, so you have to use that. It's a sunk cost, hence not relevant to the calculation. Hence not relevant to the calculation. You see the way we are doing the assumption. So please, this is what is expected of. It's not compulsory that you must say the way I'm saying it. However you think is more appropriate for you, just put it there. What is important is that you need to comment on them, on each of them. Okay? Don't go and be cramming the way I do it. No, you can do it better, depending on the way your ability to write a report. All right? Okay, move on from there. Now, let's go back to the question. Let's read further. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and will not be for sale to prospective clients. Klepatoni Limited has had assurances from 3 separate clients that they would place an order for 25 windows each if they saw the technology demonstrated in the conference. The contribution from each window is 1,045,000 naira. If the windows are used for the contracts, Klepatoni Limited will not be able to attend the conference. The conference organizer will charge a penalty before that. Now, it's a clear fact that Klepatoni Limited is going to use the window for the contracts, which means that the company will not be able to attend the conference. So that means this contribution of 1,045,000 naira for the 25 windows may be lost. However, examiner now told you that the conference organizer will charge a penalty fee of 150,000 naira for non-attendance by the company. So because Klepatoni Limited is not going to attend the conference because of this project, so the company must pay that penalty of 150,000 naira. So that 150,000 naira is relevant. However, you are also told that the chief executive of Klepatoni Limited can meet the clients directly and still secure the orders for the windows. So which means that the contribution of 1,045,000 naira, the company will still earn it. It's not lost because the CEO can still meet with the client and secure the contracts. All right. So that contribution is not lost. So the only relevant cost here is the penalty that the company will pay for non-attendance. So let's put it down. I will say Klepatoni will pay. Let me write it. Klepatoni will pay a penalty of 150,000 naira for not attending the conference. This has been included in the project cost. Okay. Now, you are now told that the company can still secure the contract from the three clients. So I would then say, since the CEO of Klepatoni can still meet with the clients to secure the order, then the contribution of 1,045,000 naira is not lost. Is not lost. Okay, that's that. So we are still on that same paragraph. Let's go and include penalty in our calculation. Okay, penalty. So I will then come here, penalty fee, 150,000. All right. Next. So we're now told for that the CEO, the chief executive, the meetings would require 2 days of chief executive's time. The chief executive is paid an annual salary of 41,400 naira, 41,400,000 naira, and contracted to work 260 days per year. So that 41,400,000, is it relevant or irrelevant? Yes. Talk to me. Relevant or irrelevant?
Irrelevant.
Why is it not relevant?
Because it's a annual payment.
It's
Whether
a
or not
salary.
salary,
Yeah.
yes.
So irrespective of the decision taken on the project, that salary must be paid to the CEO. So it's irrelevant. So let's put it down. I can then say, in addition, the salary, the CEO salary, the CEO salaries of 41,400,000 naira will be paid irrespective of the decision taken. Irrespective of the decision taken on the project. Therefore, it is not relevant. Okay, that's that. Let's move to the next one. Number 7. The house to be built requires 400 kilograms of other materials. Klepatoni Limited currently has none of these materials in its inventory. The total current purchase price for this other material is 600,000. That's 600,000 naira. Is it relevant or irrelevant?
It is relevant.
Oreoluwa,
Okay.
why is it relevant?
Because it's a replacement cost.
It's a replacement cost. The company does not have the 400 kilograms of other materials, so it needs to be purchased. So they are going to buy it in the market. The amount at which they are going to buy it is the replacement cost or current purchase price. So let's go and indicate that. Number 7, other material. Okay. Other material, the cost to be incurred on other materials of 600,000 naira for the 400 kilogram is relevant since the material is not available. It's not available and needs to be purchased. It's not available and needs to be purchased. That's that. Let's go and indicate it in our calculation. I estimated a smaller space for the calculation. Let's just manage here. So here is other material, 600,000. Don't go and do mistake and be doing 400,000 multiplied 400 kilogram multiplied by 600,000. No, the entire 400 kilogram is 600,000. Once the examiner did not tell you per kilogram, you should know that the amount, the 600,000, is meant for the entire 400. Okay. Now, number 8. Clepatoni Limited fixed overhead assumption rate is 3,700 per construction worker hour. That 3,700 relevant or irrelevant? Relevant or irrelevant? Yes. What's the answer? Anyone? Yes, Abigail, talk to me.
It's irrelevant.
Why?
Fixed overhead is not relevant. Variable overhead is just the relevant one.
Okay. All right. Yes, any other person? Yes, Oliver.
Yeah, this fixed cost, regardless of this project, will have to be paid. So
Okay.
they are not relevant to the calculation of this contract.
It's all right. Thank you to both of you. Same thing. So let's put it down in our assumption number 8. Fixed overhead. Sorry. Fixed overhead. Okay. So the fixed overhead assumption, the fixed overhead absorption rate of 3,700 naira is not relevant to the calculation. Because it's an apportionment. Is an apportionment and will be incurred irrespective of the decision taking. Irrespective of the decision taking on the projects. Okay, that's that. Number 9. Clepatoni Limited normal policy is to have 12% markup to the cost of each project. So how do we treat that information? Relevant or irrelevant to our calculation? Yes. Relevant or irrelevant to our calculation?
It is irrelevant. It is irrelevant.
Pardon?
It is irrelevant.
Why is it not relevant?
We are told about that the contract, the projection is based on break-even level.
Okay. Yes. Is that the reason why the 12% is? Remember, the company must be able to earn profits now. Oliver.
So
There is no motivation if they don't have this markup. That means the company, there is no incentive. So are you sure that this markup of 12% is not relevant?
I'm not sure, sir.
Pardon?
I'm not sure.
You are not sure. Okay. So Osiama, you wanted to say something.
Yes, just let me clear my mind. I think the 12% markup is relevant in that is a future cost.
Okay. It's a future cost. Of course, markup is a profit on cost. All right. And the company is a policy of the company that they must add a 12% markup to the cost of each house. Okay. Any other person? We have 1-1. Oliver is in support, but he's not sure. Then Osioma said that it is relevant because they need to uh, uh, earn the profits. Yes, any other person apart from the two that have commented on it? Some of you have not talked since. Abigail, go ahead.
I think the markup is irrelevant
Why?
because it's only going to affect the profit.
It's only going to affect the profit. Is that
Yes.
the reason? It's not affecting profits now. It's company will earn the profits. When you say markup,
Okay.
markup is a profit on cost. When you
I
determine the
think
total
it's
cost,
irrelevant.
then you now mark it up. That is to get your profit element.
Profit. Okay.
Yes, Orelua, you raise hand too. Go ahead, Ore. Ore, you raise hand.
Cost. Yes, I think it's a relevant cost because the 12% markup will make more profits.
I didn't get that. Take it again.
I think the markup is a relevant cost because the 12% that has been added will enable the company.
I did not get that. I did not get the last part. Maybe it's my network. You said we enable the company. I didn't get the other part.
Make additional profits. They will earn
Okay.
additional profits.
Oh, okay. The 12% will enable the company to earn additional profit. So is it relevant or not? Or
It is
relevant?
relevant.
It is relevant. All right. So because of time, let's kill it. Now, Oliver said something initially, but he wasn't sure of his answer. Mute yourself, please. So Oliver said something, but he wasn't sure of his answer initially. And that was the right thing. When you look at the first paragraph, when Emira was reading the question, I underlined it. You are told in the first paragraph that in the last statement, second to the last statement in the paragraph, in the first paragraph, you are told that the board of directors believes that securing the contract will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. So you want to quote a price. The minimum price that the company that Clepatoni Limited will quote should be sufficient to cover its cost. So the company is not willing to earn any profit. So the markup of 12% in this case is irrelevant since the company is not willing to make profit. Had it been that this information is not there, you are not told that the company has have agreed to quote a price for the house that will exactly cover its relevant cost. So that information, if this information is not there, then you would have charged a markup of 12% on the total relevant cost. But because you are told that the company wants to quote a price that will exactly cover its relevant cost, it means that that information on the profit mark on the markup is irrelevant. Just ignore it. So let's quickly indicate that. Number 9. Oliver, you are still raising your hand. Markup. The markup of 12% on the total relevant cost is irrelevant since the company intends to quote a price that we exactly cover its cost, that we exactly cover its cost, that is break even. Okay, so that's it. So we are done with all our assumptions. So let's go on total. What's the total cost? Add up all the costs. What's the total? Total relevant cost for minimum price. What's the total? Yes.
10
So what's
million,
the total?
10 million,
10,
523,000,
23,500.
523,500. That's it. That's the total relevant cost. Let me rewrite it. 500. Okay, that's it. And that's the end of the question. That's the end of the requirement number A. Yeah, that's the end of requirement number A. You can see. So it's not difficult. Just know, you must
So I
understand the
have a
underlying
question.
concept. Yes, talk to me, please.
So if the question is silent about the company agreeing to quote a price that will exactly cover the relevant cost, will the markup policy, will it be added as part of the cost of this contract?
I've already said that. I've already said that in my explanation. If not
Uh,
because of that that
Policy.
caption, just ignore it. If
Okay.
not because you are told that the company wants to quote a price that will exactly cover its cost, then if that not because that statement is there, you would have included in markup. So just as you have determined the total relevant cost of 10,523,500, you just add 12% markup to it, then you now determine the contract price. But in this case, examiner did not, examiner just want to break even. The company wants to break even, so that's why we ignore it. Yes, that's it. Okay, so let's go back to the question. Let me stop sharing this. And the second part of the question, in number B part of the question, you have to explain two reasons why relevant costing may not be suitable approach to pricing houses in the longer term for Clepatoni. You can see here that Clepatoni is quoting a minimum price that will exactly cover its cost. There is no incentive, there is no motivation, because profit is a form of incentive or motivation to a business. But if you are charging at your cost, that means except that you think that if you charge a lower price, then you'll be able to sell more. The more you are able to sell, the better. But even when you sell more, you are still covering your cost. So there is no incentives. It's not appropriate to price. It's not appropriate. It's not a suitable pricing policy to adopt in this kind of a situation in a longer time. But in any case, let me show you how I explain that. Let me show you how I explain that. I will stop sharing this. Okay, let me stop sharing this. Okay, so see my reasons. See my reasons in the in the ebook. Okay. So relevant costing concept has been applied in determining the minimum price quotation for the contracts. The relevant cost represent the cost that will be incurred purposely because of the contracts. The minimum price quotation may not be suitable for the contract because the company's intention to produce minimum price to cover the relevant cost on the contracts will not be sustainable in the long run. A markup percentage above the break-even point would have been more appropriate for the pricing. In addition, the company's financial situation may be worse off if it cannot earn contribution to offset the organization's general fixed overhead. That's point one. Because when you have a markup, that markup will serve as an incentive for an organization. You want to do more, all right? But now that you are charging at a relevant cost, there is no motivation, all right? So that's my point on that. Number 2 points that I made was that Clepatoni Limited is planning to expand operation into other countries in the future. Therefore, funds will be needed to execute the expansion, all right? If the company's expansion is not attractive to prospective investors, they will not contribute their capital to undertake the project, all right? Because money will be needed for the company to be able to finance that extension or to finance the expansion. So since the company is not profitable, the intention of the company is to just break even and all of that. So investors will not be attracted to contribute their money to finance it because they will believe that the company is not profitable. That means that investment is not viable. All right. So those are the 2 points that I made on that. Then quickly, number C part. Examiner also asks you to advise on the pricing, appropriate, suitable pricing strategy that that Clepatoni should adopt instead of relevant costing. I believe Mr. Shiwaju has taught you pricing decision. Am I correct?
Yes, sir.
Has it? So he has taught you pricing decision. So you know what is scheme pricing, okay? You know what is scheme pricing because this particular window has technology enhancements. So as a result, that is unique, differentiated, of course, and it's not common in the market, then the best pricing strategy to be adopted is a market scheme. Market scheme represents, let me just go to the what I have here. Market scheme may be more appropriate in this instance to launch the houses in the new country. Market scheme involves a strategy of charging a higher price at the initial stage of a product in the market and later lower the price to attract another customer segment, particularly when market competition is becoming stiff. Okay, so when there are more entrants into the market, then the company will need to lower its price in order to attract another segment of the customer. This will be possible only if the product is unique with high quality. Competition is minimal and there is customer demand. So you are charging higher price because the product is unique and also has high quality. There's not much competition in the market. And of course, there are customer demand. Customers are willing to buy. Let me explain this further. You will recall that when the communication company came into Nigeria in early 2000, like 2001 or 2002, the first among them was MTN. When MTN came to Nigeria, then later on, Globalcom joined, and all those Econet and all of that, they joined in the market. So when they were selling you remember when they were selling their SIM card. SIM card then they started with 6,000, then went to 18,000, even over 20,000 naira as at that time. How much is SIM card today? It was the same at a point MTN was giving SIM card for free for a few years ago. They were giving it out for free. They want people to come and subscribe to the, So that is the same thing. They were charging higher price at the initial stage when the product was introduced into the market. That is what is called scheme pricing decision. Scheme pricing policy. All right. So you only charge scheme pricing if the product is unique, differentiated, and with high quality. Not only that, there's no much competition in the market. Maybe you are the only one or few of you. You can easily control the market. All right. In fact, the seller is the one dictating the price to the customers because customer does not have a say in this case. As at that time, when the communication company came into Nigeria, we don't have none of us has phone. Then we are using Turaya. The big men are using Turaya kind of phone and all of that. Big men. But again, when the communication company comes in, and then when they came in, they were like, okay, well, this is what we want. Everybody was buying it. If you don't have the money, you hustle and then you get the money to buy your phone. Once you buy your phone, you put it the same and they begin to call. In fact, when you receive message, as I could remember that time, when you receive message on your phone, you'll be very happy. In fact, every minute you'll be wishing that, somebody will call you so that you can speak on phone. Local people. So that is market scheming for you. However, let's continue. However, it is intended that the top class material, that is high quality materials and unique energy saving technology used to produce the houses, will attract more customer segments who are willing and ready to pay high prices. The market scheming will therefore enable Klepatoni to recover the amount spent on research and development to design the requisite technology embedded in the houses. All right. So that is my position on the question on the pricing policy that the company should adopt. Okay. So that is the end of the question. Let's have one more illustration before we call it a day. Let me know if you have any question for me so far. Any question? Okay. So in the absence of no question, let's continue. Let me stop sharing this. Or just give me 1 minute, please. So let me stop sharing this so that we can move to the notes. Okay. So let's have one more illustration, please. Let's go to illustration number 4. This illustration number 4 has been tested twice by the examiner. Let's have a look. It's a different scenario. So how do you treat it if you are given this kind of a scenario question? So I need somebody to read illustration number 4. Yes? Who will help us?
I would read.
Okay, go ahead, please.
Deco Nigerian PLC is a large and diversified company with several factories. One of its factories that produces APET has not been able to meet its sales target for over 2 years. The board has mandated the company's management to take an urgent decision on what to do with the factory. The management has therefore set up a committee of 3, the factory manager, the marketing manager, and the management accountant, to analyze the situation and come up with a report on what they felt the management should do. The marketing manager has submitted 2 proposals to the committee. These are: A sales volume of 25,000 units can be achieved with a selling price of 13.50 per unit and an advertising campaign of 37,500. Or a sales volume of 35,000 units can be achieved at a selling price of 11.25 naira with an advertising campaign costing 52,500 naira. The management accountant is to work on these proposals with the information provided by the factory manager and show with calculations that will help the committee determine which proposal to be recommended to management. The management accountant is also to provide a third option the closure of the factory. The factory manager has submitted the following information to the management accountant. Budgeted sales and production of APET, 50,000 units.
Leave
Sales.
those ones. The
Okay.
following.
The following additional information has also been made available. There are 50,000 kg of material A in inventory. This originally cost 1.5 per kg. Material A has no other use, and unless it is used by the division, it will have to be disposed of at a cost of 750 for every 5,000 kg. There are 30,000 liters of material B in inventory. Any unused material can be used by another department to substitute for an equivalent amount of a material, which currently costs 1 naira 875 kobo per liter. The original cost of material B was 0.75 naira per liter, and it can be replaced at a cost of 2.25 naira per liter. All production labor hours are paid on an hourly basis. Rumors of the closure of the department has led to a large proportion of the department's employees leaving the organization. Uncertainty over its closure has also resulted in management not replacing these employees. The department is therefore short of labor hours and has sufficient to produce only 25,000 units. Output in excess of 25,000 units would require the department to hire contract labor at a cost of 5 naira 625 kobo per hour. If the department is shut down, the present labor force will be redeployed within the organization. Included in the variable overhead is the depreciation of the only machine used in the department. The original cost of the machine was 300,000 naira, and it is estimated to have a life of 10,000 years. Depreciation is calculated on a straight line basis. The machine has a current resale value of 37,500. If the machine is used for production, it is estimated to have a life of 10 years. Depreciation is calculated on a straight line basis. The machine has a current resale value. Okay, I think I'm going back again, sorry. The machine has a current resale value of 37,500. If the machinery is used for production, it is estimated that the resale value of the machinery will fall at the rate of 150 naira per 1,000 units produced. All other costs included in the variable overhead vary with the number of units produced. 5. Included in the fixed production overhead is the salary of the factory manager, which amounts to 30,000 naira. If the department were to shut down, the manager would be made redundant with a redundancy pay of 37,500. All other costs included in the fixed production overhead are general factory overheads and will not be affected by any decision concerning the factory. The non-production cost charged to the factory is an apportionment of the total non-production cost incurred by the factory. The committee will be meeting in a week's time to prepare its report to management. On the line of action management should follow either one of the marketing manager's proposal or to close down the factory. Required. As the management accountant of Adeco PLC, you are to A. Prepare detailed calculations to support the committee's recommendation to the management whether to 1. Reduce production to 25,000 units. 2. Reduce production to 35,000 units. 3. Shut down the factory. B. Discuss the management accounting technique and principle that a management accountant will apply in preparing calculations to support management decision in such a circumstance as above. A customer has just placed a special order of 25,000 units of APET, and the customer is willing to pay 12 naira per unit. Advise the management whether to accept or reject the order. Assume that for any shortfall in the material A required to produce the order, it can produce at a price of 2 naira per kg.
Thank you very much, Emiraj. Yes, that is the question. You can see it's a very big one. And usually question like this can throw an average student off balance if you don't know what to do. All right. But it's important whenever you are given this kind of a question, just keep calm. Don't be too anxious to serve. Take your time, articulate your points, and think about how you are going to present your work. But most importantly, you must understand the expectation of the examiner. You must understand the requirements. What does the examiner want me to do? In the A part of this question, 20 marks out of 40, 20 marks is awarded to that A part of the question. You are to prepare detailed calculation to support the committee's recommendation to the management, whether to produce 25,000, 35,000 units, or to even shut down the factory. So in this situation, what are you supposed to do? All right, what are you supposed to do? Because when you look at the question as given to you, when you look at the first, in the table given to you, you can see sales value. You can see sales value in the question. Also, examiner mentioned about received value when Emira was reading it. So it means that you are going to have more than one cash inflow, and there are different cash outflow embedded in the question. So you have responsibility to be able to understand how you are going to present your work, or what kind of calculation are you supposed to do. Because you have sales value in the question, and there is a decision that is to be made, as to whether the company should reduce production to 25,000 units, 35,000 units, or to even shut down. And you will recall that when we had our first class, I mentioned to you under operating statements, I mentioned to you that marginal costing technique is a concept designed principally to aid managerial decision. When it comes to decision making, you need the knowledge or the concepts of marginal costing. So examiner is asking you in this particular requirement to prepare detailed calculations. Your calculation is simply income statements. You want to calculate income statement. Why are you calculating income statement, or why are you preparing income statement? Because in the question you are given sales value, you also have cost. That means you are going to, and there's a decision that is to be made whether to produce 25, 35, or shut down. Then in that case, you need marginal costing to prepare your income statement. That's number one. Then number two, when you are preparing your statements, there are different costs embedded in the question. You are given different kinds of costs. Some of them are relevant, some of them are not relevant. So you need to apply the principle of relevant costing for you to be able to solve the question appropriately. And these are the things you need to take into consideration. So without wasting more time on this, let's begin to solve it one by one. But what is important is that you must think before you act. You have to think before you put pen to paper. You must think on how to articulate your points, how you are going to present your work, so that you don't do it anyhow. And that will also save your time. It's better for you to read and reread the question again so that you don't start and then you cancel and start all over again. But when you take your time to think about how you are going to present your work, that will save you a whole lot of time. Okay, so let me stop sharing this and move to the working notes. Okay. So solution. This is solution to illustration number 4. The name of the company is Adeco. Adeco, is it a limited or a PLC? Adeco Nigeria PLC. Number A, requirements. Requirement number A. So examiner is asking you to prepare detailed calculation to support the committee's recommendation. So there's nothing like calculation you want to do other than for you to prepare your income statements. I will just say, because I have sales value in the question, I also have cost. Sales minus cost will give me a profit. So I want to determine income statements. So I will then say income statements. Now, because in this particular question, we have three options. One is to produce 25,000 units. Second option is to produce 35. And the third option is to shut down. So let's put it down. So that's what I said. You must articulate how you are going to present your work. So in that case, I will come here, option one, option one, option two, then option three. Okay. Here is 25,000 units, 35, shut down. Okay. I don't know the extent of my table. For now, I will not draw a line. I will not draw a vertical line. All right. So for now, I'll just put mirror sign because I don't know the extent of my table. So I will then come here because in the question, I've identified that we are given sales value. Okay. Yeah, there are other cash inflows that the company that will affect your calculation. That means you are going to have more than one. It's not just about sales. So instead of you to just say sales, no, just say cash inflow. All right, you can say cash inflow. So come here, you say cash inflow, or just say cash flows, cash inflows. So under the cash inflow, all the inflows that will affect your calculation will be there. The first item is your sales. Now, if possible, you can even create additional column for your workings, or just put the working by the side. So I can just come here and say, because if I'm using board, that would have afforded me opportunity to do all of that. For now, let me just put it there. So we need to go and determine sales. So the first page will be for our calculation. The second page will be for our workings. You have to show your workings. It's not sufficient for you to just do calculation without showing your workings. Okay, so, and then not only that, any assumption you made in the question, you have to state your assumption. All right, you have to. Immediately after the calculation, you must state your assumption. I'm not going to state the assumption now because it's a whole lot of, and you can see it is about we have about 30 something minutes more. So if I begin to do all those assumptions, it will take time. I've already given you the examples on how to state your assumption previously, and I also did it earlier today. So let's move on to our workings. All right, so I'll just say workings. All right, so we have the option one, which is 25,000 units, 35,000 units, then shut down. So there's no need for you to be doing your workings one by one. So you use a table to explain that. All right, to do your workings. So working number one, I want to determine sales. And you know that sales is units sold multiplied by selling price. I will then go to the question, what is the sales volume? According to the question, what is the sales volume? Yes. In the third paragraph, you are told that a sales volume of 25,000 units can be achieved with a selling price of 13 naira 50 kobo. Okay. So I will then come here under 25. I will say 25,000 multiplied by 13.50. Give it to me. What do you have? Let's move faster. What do you have?
337,500.
337,500 naira. I'm done with that. Under 35,000 units. Examiner told you that Sales volume of 35,000 units can be achieved at a selling price of 11 naira 25 kobo. Here is 35,000 multiplied by 11.5. So give it to me. What do you have?
402,500.
402.
Yes, sir.
Do it again. 35,000 multiplied by 11.5.
402,500.
Okay. 402,500. All right. So under shutdown, nothing is there. Put a dash. We are not selling anything under shutdown.
Hello, sir.
Yes.
I have a different figure.
What do you have?
393,750.
That's the correct answer. Because that's what I asked that you should do it again.
So it's not correct though.
It's 35,011.5.
Yes.
That's
It's
402.
11.25. 11.25.
Oh, you sorry. Don't worry. No wonder. That means no, sorry, Jerry. She was correct initially. Supposed to be 11.25. Sorry about that. I was the one that misled you. Thank you. So here is 393,500, right?
750.
750. Okay. So we are done with the sales. So you can close this chapter. So I can then go there and post it. Okay. Let's go and post. The first one is 337,500. Here is 337,500. 393. 7 what? 750.
750.
Okay, dash. So this is working number 1. Let's move on. Then the next paragraph. You are told that the management accountant is to work on this proposal with the information provided by, so we are less concerned with all those story. Then, now that we have determined the sales value, let's move to the relevant cost. So you ignore the table. Whatever, please mute yourself. Whatever figure that is given to you in the table should be ignored, all right? Because most of those numbers are irrelevant. You don't need it for anything. Because I told you relevant cost question are solved through the additional information. Therefore, let's go to the additional information 1. So there are 50,000 kilograms of material A in inventory. This originally cost 1 naira 50 kobo per kilogram. Material A has no other use, and unless it is used by the division, it will have to be disposed of at a cost of 750 naira for every 5,000 kilograms. Now, the company already has 50,000 kilograms of material A in the inventory. That means they've purchased that 50,000 kilograms before. Therefore, and they incur one naira 50 kobo to purchase it per kilogram. Therefore, that 1 naira 50 kobo is irrelevant because it's an historical cost. It's a sunk cost and therefore should be ignored. That is not relevant. Okay. However, you want to produce 25,000 units. You also want to produce 35,000 units. There is a shutdown. So examiner is now telling you that, okay, material A has no other use unless it is used by the division. It will have to be disposed of at a cost of 750 naira for every 5,000 kilograms. So all you need to do is to, out of the 50,000 kilograms that you have, you need 25,000. So 50, let's save time. Let's save time and begin to do our workings so that we just talk through it. Let's go and do our working. So that's a saving. Working number 2. Material A. Material A, saving. All right. So that's a saving on material A. You are told that The company has 50,000. That is a 50,000 kilogram of material A. And you know that you are going to need 25,000 kilogram. And you are now told that the balance that you don't need, the balance that you don't need can be disposed of at a cost of 750,000, sorry, 750 naira per every 5,000 kilogram. This is the 5,000 kilogram multiplied by 750. Now, pay attention. Remember, I told you, examiner will tell you that material will be disposed of at a cost. It is not a cost, rather, it's a saving. So the company will save that money. Therefore, give it to me. 50,000 minus 25,000 divided by 5,000 multiplied by 750. What do you have there? Yes. What do you have?
37,500.
97.
37,500.
Okay, 3,750. 3,750
No.
is the saving. That's the saving arising from the disposal of the unused balance of 25,000. Move on from there. We are
Sir, I
moving to
think I
under.
have a different figure.
What do you have?
3,750.
Yes, that's what I wrote. 3,750. All right. So let's move to under 35. The company has 50,000 kilogram in the inventory. You need 35,000. So the balance that you don't need, which is 15,000, you are going to dispose it off for every 5,000 at 750. Give it to me. 3 multiplied by 750. What do you have? 2,250. Then under the shutdown, the company has 50,000 in inventory. Since you are shutting down, you are not producing anything again, minus 0, divided by 5,000, multiplied by 750. Give it to me. What do you have?
75.
7,500. This is a saving to the organization. So let's go and post it. 3,750. So material A, saving. Working number 2, 3,750, 2,250, 7,500. I'm done with that. Move to the next one. Okay. If additional information number 2, you have to state your assumption, the reason why you ignore the original cost of 1 naira 50 kobo per kilogram. You have to state it. That is an history. I will show you later on, but I'm not going to write it down because of time. Move on to number 2. There are 30,000 liters of material B in inventory. Any unused material can be used by another department to substitute for an equivalent amount of material A, which currently costs 1 naira 875 kobo per liter. The original cost of material B was 75 kobo per liter, and it can be replaced at a cost of 2 naira 25 kobo per liter. Now, this is what the examiner is telling you. The company has 30 liters of material B in inventory. Out of 30 liters, the company needs only 25. So the balance of 5,000 that you don't need, what do? It can be used by another department at a price of 1 naira 875. So it will be disposed of to another department as 1 naira 875 kobo. So that's a saving for option 1. Option 2, you need 35,000 liters, but you have only 30 liters. That means you are going to buy the balance of 5,000 liters will be bought. At what price? You are going to buy it at the replacement cost. Okay, because you need to buy it in the market. It has to be at a replacement cost of 2 naira 25 kobo. So the original cost of the material B of 75 kobo is historical cost. It's a sunk cost and therefore irrelevant. You have to ignore that. Quickly, let us go and indicate. Number 3. Material B. Okay. Material B under the first option. Under the first option, the company has 30,000 liters of material B, and the company needs only 25,000. Okay. So you are now told that any unused material, any unused material B can be used by another department to substitute for an equivalent amount of a material, which currently costs 1 naira 875. Therefore, that's a saving for option 1. The difference of 5,000 will be disposed of at 1 naira 875. So give it to me. What do you have there?
9,375.
9,375 for option 1. Then for option 2, the company has only 30,000 liters and the company needs 35,000 liters. Okay? So the balance, we can see what you need is more than what you have. The extra that you need, what do? You go to the market and buy. At what price are you buying it? You are buying it at a replacement cost. And the replacement cost is 2 naira 25 kobo. So give it to me.
11,250.
11,250. This is a cost. Now, under shutdown, the company has 30,000 liters. You are producing nothing. Therefore, you are going to dispose of the balance. You are going to dispose of the entire 30,000 at 1 naira 875 kobo. Okay? Oh, I don't have space there again. Okay, let me write that. So this will then be equal to 30,000 multiplied by 1.875. Hope that one will show. All right, this will give us, what do you have there?
11,250.
No, 30,000 multiplied by 1.875.
11,250.
56,250.
56,000.
250.
250. That's it. So I will then close this. Okay. So let's go and indicate that. For material B, there's a saving for option 1 and option 3. Material B. Material B. Saving. Working number 3. Here is 9,375 dash. There is no saving for option 2 because you are buying additional liters of material B. Then here is 56,250. I'm done with that. Move to the next one. So at each point, you have to state your assumption. Number 3, all production labor hours are paid on an hourly basis. Rumors of the closure of the department has led to a large proportion of the department's employees leaving the organization. Uncertainty over its closure has also resulted in management not replacing these employees. Those are story. I'm not interested in that. The department is therefore short of labor hours and has sufficient to produce only 25,000 units. Okay, the company has capacity to produce only 25,000 units. Output in excess of 25,000 units will require the department to hire contract labor at a cost of 5 naira 625 kobo per hour. Okay, so let's indicate that if the department is shut down, the present labor force will be redeployed within the organization. So let's account for that. Working number 4. Labor cost. So what are you supposed to do here? You want to put, examiner has told us that the company has only 25,000 capacity to produce. We only have 25,000 capacity for labor. So if that is any point above 25,000, like in this case where you have 35,000 units to produce, so you are going to pay, the company will pay 5 naira 625 kobo. Okay. So in this case, I would then come here 25,000. That's the capacity that the company has, multiplied by What's the labor cost per unit? Labor cost per unit is not given to you. You are the one that will determine it. Therefore, labor cost per unit is equal to the total labor cost divided by the activity level. I don't need to be putting formula there. So according to you then go to the table as given to you. From the table, there's a labor cost given in the table. Labor, 1 hour per unit, 185,500. Are we together?
Yes,
So,
sir.
yes, so all you need to do is to then go there, the activity level that made up the 185,500 is 50,000 units. Therefore, 187,500, 187,500 divided by activity level of 50,000. Labor costs per unit would then be equal to what? What do you have? Yes,
3 naira 75 kobo.
3 naira what?
75 kobo.
3.75. 3.75. So that's the labor cost per unit. I would then say multiply by 3.75. So give it to me. What you get? Yes.
93,750.
93,750. That's total labor cost under the first option. Again, in the second option, you see the same thing. The company has only capacity to produce 25,000. At what price? 3 naira 75 kobo. So the company will incur 93,750. However, you want to produce 35,000. You have considered 25. So you have 10,000 balance to produce. Therefore, you then say the balance of 10,000. You are told that, because according to the question, examiner told you that output in excess of 25,000 units will require the department to hire contract labor at a cost of 5 naira 625 kobo per hour. Okay, extra labor at 5 naira 625 naira. So this will give you 625 kobo rather. This will give you 56,250. Therefore, the total labor cost that will be incurred under 30,000 unit option is what? That should be 93,750 plus 56,250. That will give us 150,000. Am I correct?
Yes, sir.
So under shutdown, you are less concerned with that. There's nothing like labor cost under shutdown. Let me just do this like this. Okay. So that it doesn't match together. Okay. So let's move on. So of course, this one has to do with cost. When we want to determine the cash outflow, we are going to consider that. So you close. Number 5. Point number 5. Let's go there. Again, don't forget, sorry, number 4, you have to state all your assumptions. Number 4, you are told that included in the variable overhead is the depreciation of the only machine used in the department. The original cost of the machine was 300,000 naira and is estimated to have a life of 10 years. Depreciation is calculated on a straight line basis. The machine has a current receipt value. That's another point. But first thing first, we need to determine the overhead cost, variable overhead. And we are told that the variable overhead given in the question, when you look at the table given to you, you will see that overhead cost is 150,000 naira, isn't it? From the table, overhead cost is 150,000 naira. And you are now told that that variable overhead of 150,000 included depreciation of 300,000 naira. Okay, sorry, included the depreciation. So and the value of the depreciation is not given to you. You need to compute it. Once you get the value of depreciation, you less it from the variable overhead of 150. The balance you have is relevant that you are going to use. You don't divide it by the total output, which is 50,000, to get the variable overhead per unit. Then you now multiply the variable overhead per unit with the option 1, option 2. All right. So this is what I'm trying to say. Okay. Working number 5. First thing first, you need to determine the depreciation. Now, the examiner has told us that depreciation is on a straight line basis. Therefore, I'll pick the total cost of 300,000 naira for the machinery. We divide it by the 10 years. Okay, this will give us 30,000 naira. This will give us 30,000 naira. Okay, that's one. I'm done with that. It's not related to any of the options. That's just a working. Then number 6, we need to calculate the variable overhead. So in the variable overhead, the examiner told us that this variable overhead, let me do it this way so that you don't think this one is for, okay, it's clear. Now, the variable overhead, we are told that included depreciation of 30,000 naira. I will then come here. I want to determine variable overhead per unit. So which is equal to 150,000 according to the question, all right, minus 30,000. Let me see, so that I don't jump into that option. Let me rewrite it. Let me rewrite it. This 30,000, let's bring under here, so that it will not fall under any of those options. So number 6, variable overhead. So ordinarily, I'm supposed to determine variable overhead per unit and then multiply with the 25,000 and then 35,000. But variable overhead per unit is not given to me, and I need to work it out myself. So I will then say variable overhead per unit equal to the total overhead of 150,000 given in the question. We are told that this overhead included depreciation of 30,000. You need to less depreciation because depreciation is not a cash flow. Okay, then divided by the output. Output is 50,000. So what do you have as variable overhead per unit? What do you have there? Yes. 120,000 divided by 50,000. What do you have?
2.4.
2.4. Variable overhead per unit is 2.4. So I would then come here. Under 25,000, you say 25,000 multiplied by 2.4. What do you have? Yes?
60,000.
60,000. 35,000 multiplied by 2.4. Yes?
84,000.
84,000 naira. So we are done with that. We are done with that. So when we are doing our cash outflow, we are going to indicate that. Now, but of course, you have to state your assumption on depreciation. What assumption have you made on depreciation and all that? So you need to state all of that. So number 7. Number 7 workings. Then we are still on points. Additional information number 4. We are still on additional information number 4. You are also told that the machine has a current receipt value of 37,500. If the machinery is used for production, it is estimated that the receipt value of the machinery will fall at a rate of 150 naira per 1,000 units produced. All other costs included in variable overhead vary with the number of units produced. So what the examiner is trying to say here is that you want to produce 25,000 and 35,000. So if you use the machine to produce, the receipt value will fall. If the company wants to dispose of the machinery, they are going to earn 37,500 naira. But if you use the machine to produce, the value will drop by 150 naira for every 1,000 units produced. So let's determine the net receipt value. Net receipt value. Let me come here. Working number 7. Okay. I want to determine net resale value. To get the net resale value, the resale value originally, the resale value for each option is 37,500. It's 37,500. Here is 37,500. Here is also 37,500 for the three options, right? Then you need to less 4 in value, reduction in value, reduction in value. So for the reduction in value, your examiner has told you that for every, the value will drop by 150 naira. The value will drop by 150 naira for every 1,000 units. So I need to come here. I would then say, I want to produce 25,000. I want to produce 25,000 divided by 150. So divided by 1,000. For every 25,000 unit product, the value will drop by 1,000 units at what price? 150 naira. So give it to me. What's the fall in value under 25? That is 25 multiplied by 150. What do you have there? 25 multiplied by 150. What is it? What do you have?
Three seven five zero. 3750.
3750. Okay, 3750. All right then. You see, of course, it's a reduction. So you are going to less it. It's a reduction. All right. So what do you then have? 37,500 minus 3,750. What's the balance?
33,750.
33,750. Okay. So that's the net resale value. You do the same thing under 37,000, under 35,000 units. Here, you want to produce 35,000 units. The value will drop by 150 naira for every 1,000 units produced. So give it to me. What's the fall in value? Quickly. Time is
5250.
what?
5250.
5250. 37,500 minus 5250. Yes. 32,000 watts. 250.
32,250.
So under shutdown, you are not producing anything. You are not producing anything. So minus 0. The company will earn 37,500. Since you are not producing anything, that is, nothing is being produced. So just put a dash in that one. All right. So that is that. So this is a saving. The next resale value is a saving. So let's go to the question and indicate that. Okay. Let's go and indicate that. Net resale value. Working number 7, I think. So here is 33,750, 32,250, 37,500. Okay, that's that. Let's move on. Of course, you have to state all relevant assumptions. All right. But for now, let's move to number 5. Included in the fixed production overhead is the salary of the factory manager, which amount to 30,000 naira. If the department were to shut down, the management will be made redundant. Okay, before we come back to that, that 30,000 naira, the factory manager's salary of of 30,000 naira. Is it relevant or irrelevant? Yes. Factory manager salary of 30,000 naira. Relevant or irrelevant? Pardon?
Relevant. It is relevant.
Why is it not relevant?
It is relevant.
Temitope, why are you the one that says it's relevant, right?
I said it's irrelevant, sir,
Irrelevant. Why is it not relevant?
because it's a monthly salary.
It's a monthly salary. So, Oliver, why did you say it's relevant? Oliver,
So,
why did you say it's relevant?
sorry, it is irrelevant.
It is not relevant. Why is it not relevant? Yes.
Well, I have this mix up, but my thinking is this: it is directly related to production. So if
Okay.
production is not taking place, it's not being cured.
Okay. All right. So it is relevant. Why is it relevant? Let me explain to you. According to the question, that examiner has told you that included in the fixed production over, when you look at the table, the fixed production overhead is 75,000 naira. So examiner is now telling you that 75,000 naira included factory manager of 30,000 naira. Examiner also mentioned that all other costs included in the fixed production overhead are general factory overhead and will not be affected by any decision concerning the factory, which means that because examiner has singled out, irrespective of the units produced, whether the company produced 25,000 units or 35,000 units, that factory salary, manager salary will not change. But examiner singled out the factory manager salary out of the fixed overhead of after the production overhead of 75,000, and you are now told that the remaining ones are general factory overhead. So which means that the factory manager salary is relevant. We have to, if not because of that statement, would have just say it's irrelevant. But because of the fact that examiner singled it out of the production overhead of 75,000, that is why you have to account for the 30,000 naira as part of your cash outflow. That is one. Then we are also told that there is a redundancy pay. If the departments were to shut down, manager will be paid a redundancy fee of 37,500. That is also relevant under shutdown. Then the last one, because of time, the last one is that the non-production cost charged to the factory is an apportionment. You know already, any apportionment is an irrelevant cost, therefore should be ignored. So quickly, let's complete this. There is no cash inflow again. So add up all the options, add it up. Add it up. This will represent total. This is total inflow. Add it up for me, please. What do you have? What do you have?
Shutdown is
384,
384, 375.
374, 375, sorry.
384,
375.
375. The second one, call the number for me, please. You're already behind schedule. You have FR now.
428 to 50.
428, 250.
428, 250.
Yeah.
Under shutdown,
101 250.
101, 250. Because if I don't complete this particular table now, we have to redraw the table again next time. So we have to just complete this. Just give me additional 2 more minutes. Now let's go to under cash inflow, cash outflow. Under the cash outflow, the first item is advertising campaign. So pick the number for me. Advertising campaign. Under 25,000 units. What's the advertising campaign as given in the question in the third paragraph, where you have the sales value, 37,500. Here is 37,500. Then here is 52,000 watts.
500.
500. There is no advertising under shutdown. Then what are the other costs that we have considered, that we have given in the question? So from our working, under material B, there's a cost for second option, for option 2, under material B. So I will then come here, material B, working number 3, okay? Dash, here is 11,250, dash. What again? After material B, then we have labor cost. Labor cost is 93,750, then 150,000. Labor, 93,750, 150,000. Dash. Then after labor, what's the next one? This is working number what for labor? Labor is working number 4. Then we also have variable overhead, 60,084. This is working number 4. Variable overhead, working number 6. This one is 60,000, 84,000. Dash. What else? In that labor cost, I think, is that where we have the redundancy pay? No. So we also have factory manager's salary. Factory manager's salary. $30,000. 30,000. Dash. We have redundancy pay. Redundancy fee of 30, if you shut down, of 37,500. Then you also have what? What else? What other expenses or other costs? Okay, is that all? Go to the question. Any other expenses that we have not considered? Oh yeah, add it up. If that is all, add it up. Here is 37,500. Yes. Total outflow. Add it up.
221,250.
221.
250.
221, 250 minus 384.
163, 125.
163,
125.
125. Okay. Then the next one, option 2. Somebody should be doing option 3.
327, 750.
327, 750 minus 428, 250.
100, 500.
100, 500. Then other shutdown. Under the shutdown. 60 watts.
63, 750.
63, 750. That's it. That's end of the calculation. Immediately after this, you need to state your assumption. Thank you, Alexa. So you need to state your assumption after this. All right. All relevant assumptions, you have to state it. You have to state it. So, and then that's that. Then after this, then you now go to number B and C. Okay. In the number, let me just quickly show you. Let me stop sharing this within the next few minutes so that you can join your FR. I'm very sure Mr. Who is taking you FR today? Is it Mr. Abi or Mr. Wasir? Okay. Let me show you quickly. Because of time. So that in our next class, we are moving straight to short-term decisions. So this is the calculation that we just did. Then, of course, like I said, you have to state all your assumptions. What do you mean? What assumption have you made under advertising campaign, under the material? Okay, so you need to state all relevant assumptions, how you come about your numbers. Then, in the B part of the question, examiner is asking you what management accounting technique and the principle that can be applied in the situation such as above. I've told you because there's a decision that is to be made whether to produce 25,000, 35,000, or to even shut down. The appropriate or the suitable technique to be used is the marginal costing technique. And that is the explanation you have here on the screen. That's what you have in this material. The management accounting technique that can be applied to the calculation above to support management decision is marginal costing technique. So you need to explain what is marginal costing technique. What are the areas of application of marginal costing technique? That's what the examiner is asking you. Okay, you can use marginal costing technique under discontinuance of a segment. Okay, under deleting of a segment, order make or buy, acceptance or rejection of a special order, linear programming, optimal mix, and all of that. So again, the second part, examiner is asking you what principle that can be applied. In our calculation, we have applied the principle of relevant costing. Therefore, you need to explain what is relevant cost. Relevant cost are costs that are directly attributable to a course of action in making managerial decisions, all of stuff. Then you now talk about the attributes of relevant costs, future, cash flow, incremental. By the time you begin to explain what is future, what is incremental, you see that almost about 2 pages is already full so that you can earn your 10 marks. That's what you need to do. In the C part of the question, examiner is also asking you whether you should accept an offer and all of that. So this is my calculation on that. But in any case, I will see what I can do about this C part. I can just send you the screenshot of that and you have it so that I want to release you so that you can go back and join your FR class. Let me know if you have any question for me before we close the class. Let me know if you have any question for me.
Can you share us your solution sheet?
This is my ebook. All right.
Okay.
It's my ebook. If you have the access to the ebook, you see all the solutions there. You see the solutions there. All right. And as it's recording now. When you are listening to the video, you see the answers the way I did it. Okay.
Okay.
But if you need access to the material, just send me the WhatsApp chat. All right. We'll take it off from there. Okay, guys. In the absence of no further question, I want to say thank you. Yes, somebody, okay, Alexa. So I want to say thank you to all of you that joined the class this evening. I will see you next time by the grace of God.